Every investor wants the same thing: a city where demand grows, rents rise, and your money actually works for you. But in the UK today, many investors are still chasing old data. They're heading to cities that are losing their competitive edge and missing out on the locations quietly building the perfect fundamentals for 2026. My name is Judy Halliwell. For 2 decades, I've advised global investors on where to place their capital, which is often in cities they hadn't even considered. So in this video, I'm going to break down the UK cities that are positioned to stay strong in 2026 and why, and what smart investors are doing right now to stay on the right side of the investment cycle. But let's first look at why certain cities come out on top. A recent Bloomberg report highlighted Manchester isn't just growing, it's outpacing the entire nation at a GVA rate twice the national average. That puts Manchester at a staggering 3.1% annual growth rate, much higher than the UK average of 1.6. But why is the economy the primary driver? Success in 2026 isn't about luck, it's about a city's ability to reinvent itself. Bloomberg points to Manchester's transformation into a mini London of the North. It's no longer just about manufacturing, it's a global hub for the digital, tech, and creative sectors. When a city's economy thrives, global employers take notice and open major offices there. This in turn attracts top talent, encouraging a sustained rental community and a supply and demand imbalance that boosts investors' rental income. So, with the economy a key driver to showing investment success, how does a city sustain that economic growth? It's through a student and talent pipeline. Cities like Manchester and Birmingham boast graduate retention rates of around 50%. Think about that figure for a minute. Half of the students who move there to study choose to stay and build their lives there. And Manchester attracts over 120,000 new students to the city each and every year. With multiple top-ranked universities in the city, Manchester draws students in from across the world from over 150 countries. This creates a diverse community and contributes largely to the incredible population growth in the city centre, which now stands at 100,000, up significantly from just 500 in 1990. Maybe it's the city's incredible music scene or the renowned football clubs that entices them to move for their studies, but what encourages them to stay post-graduation is the abundance of career opportunities there. Let's look at Manchester, which is well established as a major business hub for global corporations. 80% of the FTSE 100 companies hold a head office presence in Manchester. Now, that's thousands of job opportunities and graduate schemes available for each year for young professionals. It's also becoming the number one choice for companies relocating from London. For example, 7,000 of government employees are currently relocating to Manchester from London. And companies like Puma are also making the move up north, relocating their entire head office operations. And other cities are also seeing the same pattern. Birmingham boasts all of the big 4 consultancy firms, with EY, KPMG, Deloitte, and PwC retaining a head office in the city centre there. And if you take a look at another university city, Leeds, this now has become the UK's secondary financial and professional services hub. This creates a sustained cycle. The talent attracts the employers, and the employers keep the talent. With all of these students, young professionals, and global employers, populations are increasing, and for the cities to remain successful, they need to manage their infrastructure. The top UK cities are doing this through regeneration and investment. For example, Manchester's mayor has recently announced new clusters with major investment into specialised zones across the city, including science, sport, and media. This type of investment encourages the economy to continue to thrive and adds long-term value that will last a lifetime, not just offer a temporary boost. In Edinburgh, the £1.3 billion coastal transformation is building an entirely new community, introducing new talent and jobs to a key area. And in Birmingham, the high-speed bullet train HS2 is transforming Birmingham into a commuter hotspot just overnight. Manchester is truly leading the way in how regional cities can not only compete with London, but actually outpace it, and other cities are following suit. Ex-Manchester Council CEO Joanne Roney has overseen the city throughout its major growth. and is now moving on to Birmingham as the next project. So is Birmingham then set to see major success like Manchester? In my opinion, it most definitely is. Birmingham's institutional investment in infrastructure such as HS2, a major new metro expansion, a new football stadium and regeneration schemes worth £3 billion strongly demonstrate that Birmingham is just at the very beginning of its growth story. This regeneration isn't in place just to beautify the city or to make areas more aesthetically pleasing. It's strategic investment designed to attract global businesses, which then encourage an economy to thrive. This then makes for a strong investment city, and a city that is established enough to withstand market changes. And there's data to back it up. Now, let's look at the numbers. Some investors still think London is the safest bet for rental growth, but the data is saying otherwise. Take a look at these recent statistics from leading industry researchers JLL. As you can see, cities like Manchester, Birmingham, Leeds and Edinburgh are predicted to have major growth, all forecast over 20% property price growth by 2030. And when you look at the rental predictions, it's a similar story, with Manchester leading the chart at 20.5% rental growth by 2030. While London remains a global powerhouse, its rental growth is slowing due to the high entry prices and lower yields, which, as you can see in this chart by Savills, is having a negative impact on its property value. In many cases, young professionals and businesses have come to the realisation that they don't need to pay London rents. They can experience the same lifestyle and opportunity in other regional cities such as Manchester. Jobs that were previously only available in the capital are now available up north, and employers are following the talent, expanding their offices in cities like Manchester year on year, which in turn boosts the economy and create a positive outlook for investors. For property investors, my advice is to follow the data. Research and growth predictions are incredibly useful when you're researching investment opportunities, but also look at the reasons behind the growth. Take a look into the key sectors, the economy, the talent, and the infrastructure. Are these present in the city you're interested in? Are they growing? And most importantly, is it growth, projects, and investment that is both realistic and sustained? Now, it's one thing to understand why certain cities will grow and why others are at risk, but it's another thing entirely to choose the right project inside the right area. If you want help picking the right city, the right regeneration zone, and the right project based on real forecasts, you can book a call with my team using the link below. The next challenge is figuring out exactly what to buy when you have a specific budget. That's why you should watch this next video where I break down where I would buy if I had £100,000 to invest in property today. It'll walk you through the best strategies, best areas, and realistic expectations for that budget.